CIO of a large AIF. He told me this thumb rule, saying that never talk about business with anyone unless you have met him 6 times outside the business settings. A lot of people, send me CVs on LinkedIn. Tell me 3 reasons why I should hire you, and nobody responds. We ask people to send their CVs along with the idea. You won't believe it. Despite writing that, out of 100 people, only 10 people will do that. And you automatically filtered. And the most important thing, your starting salary has nothing to do with your ending salary. No matter which salary you start with, it has a habit of changing very fast. That's also a misconception,
because of which people don't start working.
People don't start working.
That brings me to the next thing. So I'll come to the time management in a bit, but networking, you seem to know anybody and everybody. So whenever I'm asking him a question, this is for you. So he's like, okay, this person will be able to help you on this person. I mean, somewhere or the other, you're very well connected to people in the industry and even beyond, and you make time. So that's actually, I want a detailed answer to that, which I've been asking every time I meet you. In terms of, remembering names, remembering what they're doing, being able to make time for events, for meetings, for sessions, for almost everything. How do you network? There's a lot of misconception around networking with people.
So there are 2 kinds of networking.
Okay.
And I've also done that in the past. You go to a event with 100 cards
Right.
and ensure that you're given 100 cards to some people.
Right.
Randomly, whether you know them or not, and you collected
Right.
some cards.
I can't do that.
That is card exchange.
Right.
The other is, go to event, maybe meet only 5 people, 7 people, 10 people.
Right.
But try and understand more about them in terms of what they do. Right. And a lot of times, the perspective is always to ask them in terms of what they are doing and try and be more interested in that. That conversation, if you do it with someone, you will remember it forever. And you will remember his name also.
Right.
And the next time you have to refer it to someone else. I have a CIO of a large AIF. He told me this thumb rule, saying that never talk about business with anyone unless you have met him 6 times outside the business settings. So if I want to ask a favor from you, you should only ask me if we have already met 5-6 times separately in a non-business format, and we had conversations and we know each other, and then I'm kind of eligible to ask you for, can you refer me to this company or that company or connect me to this or otherwise, right? Because look at it this way. If I am connecting you to someone, I am putting my neck on line, or I am putting my reputation on line in connecting, saying that, look, I am referring to so and so, and how will I be sure, on what you are looking at? Out of 100 people, you might find one who will always kind of do that. And then you will have one boss, this person I should not connect to anyone else from that perspective. But the idea is that you try and find out from people what is it that they are looking for. So a lot of people, send me CVs on LinkedIn and I ask them, tell me 3 reasons why I should hire you. And nobody responds. So rather than saying that we are not looking for hiring, I ask them, tell me 3 reasons why I should hire you. It's as simple a question. I mean, what value can I add and stuff like that. And nobody responds. Right? It's as simple as that. Right?
People are lazy in terms of
we ask
the other person to do the homework.
We ask people to send their CVs along with the idea, along with the trade idea, Excel model.
Okay.
You won't believe it. Despite writing that, out of 100 people, only 10 people will do that.
And
you automatically filtered.
Of course. Absolutely.
Now, I'm not worried about whether what thing you did in your model, but at least you have taken some effort in doing that, right?
It shows the seriousness and the intent.
So in networking also, people are also trying to judge your seriousness and intent. Are you serious enough to meet someone to talk general, or are you sort of, there is something in it for me, right? So people are always, what's in it for me? So they're always trying to judge. What's in it for me? What's in it for me?
That's also about what you bring to the table. So people go to network with an idea that I'm going to be absorbing or getting something out of it, instead of even thinking about the fact that what are they going to be able to add to that discussion, to a conversation. How interesting are you sounding to somebody? What is the knowledge or value add you're making to the other person?
So I always tell people, saying that if you're looking for a private equity job, where are you going to find those people who are going to give you a job? It could be a private equity conference.
Right.
It could be a private equity event. It could be some company's annual day or something.
Right.
But unless you attend those events, how will you be with those people?
Right.
It could be a LinkedIn group or some other group. But if you're not in front of those people, so if you are in a LinkedIn group full of 2,000 private equity guys, and you post some idea about private equity over there, at least some people will respond, or at least they'll start thinking you.
Right.
So I asked this question, saying that, do you like Warren Buffett?
Do
you like Warren Buffett, or do you like his teachings or his style of investing?
Okay.
Right? And have you confused between the two? And it could be same for an author, right?
Right.
For example, do you like Sidney Sheldon? Right? Or do you like his novels? So people equate content with
the person.
Right? If the content is good, the person automatically has a image in it. Right. Same story goes there. Right? When you meet people, you try to judge them from their content, from their, the way they talk. What are they talking about? Right? Are you talking about, is the first conversation we're going to have is, can I get a job? Or is the first conversation saying that, how do you analyze this company? Or I read this interesting news and how do you think? Or you guys invested into so and so, what's your view? Etc. People will remember conversations. People will not remember anything else, right? So when you meet people, try and connect with some unique aspect for them, which can help you remember. And second is always try to do something for them.
Yes.
If you do something for them, so, I had seen this, I may have told you this already, but I've seen this movie called Hatim Tai, way back. Old.
I started Vikram Betal last time when you told me.
Vikram
Hatim Tai.
So Hatim Tai is a movie. It's a Jitendra star.
I have seen that. I've seen that.
So Jitendra has to solve some 9 questions in order to, make the pari alive. That's all. So the first question is, Neki kar aur darya mein dal.
Right.
Okay. So the whole point is same thing.
Right.
That you do good and don't expect anything.
Correct.
And it will come back to you.
Yes.
Okay. You don't know which person will be on what side of the table when you are in need. Okay. And help can come from anywhere. Right. Majority of my career decisions, including a back, have always been based on some work which I did with volunteers, right? And not because we went for an interview and we appeared there and something happened over there, right? So people are always watching you. Whether you're doing something, then also watching. If you're not doing something, then also they're watching.
True.
Okay?
True.
But for that, you have to do something.
Correct.
Right? Unless you write something, how will people know, saying that at least you've taken some effort? Right? So with networking, the same thing applies. You have to do something for them. It could be as simple as sharing a report. Okay? So for example, mutual funds releases their fact sheets. Okay? You already know which fund owns what. Right? If you've written a model on one of those companies, what stops you from sending it to all those funds who have bought? Let's say if you have a sell, hypothetically, and this is one of my friend did it. So he at the peak of he wrote a sell side report on a very large bank. It's a large darling bank, and it's a buy for everyone. Almost every FII, every mutual fund in the world owns it. And he wrote a sell report on it.
Okay.
With valuations or otherwise.
Okay.
It was it's not that he did it out of getting attention, but he did it genuinely with the way about its valuations are high, etc. And you won't believe it. He got like calls from all across the world, somewhere or the other, because people always want to know if somebody has written a contrarian. Right? And that immediately got him that attention which he's looking for. Right?
Right.
There are other people are doing a lot of things to get eyeballs, but I think this is one of those not
don't
so.
Be the Urfi Javed of finance. If I were to put
So don't be that. But I'm saying do something different. Do something right there. For example, I always give them that if you want a sell-side analyst research report, if you want to become a sell-side analyst, go to a sell-side head, tell him saying that, look, you cover 60 stocks in your sell-side coverage, the other people are covering 80. Here is an additional 20 companies which I'm going to cover for you, free of cost for 3 months, just to show that I'm proving my value. See, what's the biggest decision for a sell-side head to hire you? To allocate a cost. And to have someone, whether he might work or not.
Yes, and to bring that value to the table.
Now, if he's already seeing the value on the table on an experimental basis for 3 months and output is there.
Yes, why not? Of course.
You want opportunity first, he wants output first.
Right.
So it's a chicken and egg.
You want to take the effort, and even if it doesn't work out, that particular job, you've learned in the process for the next one.
And the most important thing, your starting salary has nothing to do with your ending salary. No matter which salary you start with. It has a habit of changing very fast.
Because of which people don't start working.
People don't start working.
So when we're looking at the different verticals, we've understood sales and everything. So what are the other verticals, like say technology? How big is the tech department? Because today everything, talk about Bloomberg, the softwares, the algos, the trading platforms, the data analytics. So what about the tech aspect in our PNS?
See, currently our tech department is very small. It's barely 3 people. And largely they are tasked with cyber security or essentially making sure systems are secure and we are maintaining all the BCP and DR statistics. So if you look at regulation, your systems have to have a RTO, RPO 4 hours and 30 minutes, which means that you should be able to recover your system in 4 hours time with a 30-minute lag data. So that amount of data requirement you would need, right? And you would need people who can manage that on a day-to-day basis. Now, the biggest risk for any AMC is not its performance; it's its data confidentiality.
Yes.
Right. You would have heard, these ransomwares locking your data and then asking you for ransoms. Imagine if, the data for clients is leaked or the investment is leaked, the amount of penalty and other things you will, envisage under the PDP
and the
Act
banks
now.
Pay a lot of penalties.
Right? So it's a big risk. And you are talking about the HNI clients, which are more so peculiar about their own privacy than other things, right? So privacy is a very, very important thing here, irrespective of, whether it's access to employees or outside otherwise. So currently it's that. But large PMS houses, if you look at, they'll typically have a team of between 5 and 10 people.
Okay.
And a lot of these people are working to optimize the client experience by developing applications. Right. So for example, I have another PMS who has hired 3-4 people in technology. And right now they are using technology to optimize their order management system.
Okay.
So, for example, PMS is a bespoke arrangement, and you keep on buying, selling for clients, right? So, their technology system currently optimizes and finds out, saying that, okay, in my portfolio, how many clients are there whose this particular stock X I bought it at 200 rupees price.
Okay.
And you want to only sell for those. See, remember, we are a model-based portfolio system. So, if I sell, it could sell for everyone, including the guy who had got in yesterday or last week, and for him also I would have bought it, right? So you can use technology to optimize your order management system. You can use technology in a different context, maybe a Python or a data analytics, to get your results properly. So for example, at our place, we track how many management interactions we have had.
Okay.
So we have almost 1,000 to 1,200 interactions with managements every year. So we track almost 350, 400 companies.
Okay.
And we track in each time, when was the last time we met management and what had we spoken to them. So digitizing your entire conversation flow with management, so that you can, obviously one, do record keeping. And second is use it when you want to recall, saying that last time this management has said this, but now he's changing the tone, right? So numbers and everything is one. I mean, you can automate the model by linking other things, but digitizing the rest of the pieces of investments, that is one thing which they do, right? The other thing when I talked about optimizing client experience is essentially making sure that the onboarding and the delivery of statements or, the view which clients have in terms of their portfolio, that is optimized, right? So whether it is performance presentation, whether it is comparison with the index, whether it is, attribution analysis, a lot of things you can do with technology. And onboarding, digital onboarding, I mean, you are now, used to kind of, getting everything with Aadhaar card in a, click of a button or otherwise. That thing obviously to a large extent is missing in financial industry because this, I mean, anybody who's investing with 50 lakhs don't want to do this transaction online, right? Slowly, gradually, obviously, we are getting there. Government has now, I think, allowed digital power of attorney as well.
Right. They did.
And with that, I think it opens up a way to completely digitally onboard a client. And as we go along, I think, we'll have to build that much trust in the system so that the client can do that much more of transaction, right? That's mostly on the technology side. I mean, obviously, there are other use cases which you can do for monitoring your data, monitoring your company, So, for example, I mean, one of the large houses I know, they have made a tool which can import a lot of this XBRL data from exchange website.
Right.
So now exchanges are allowing you XBRL data and they are directly consuming the data from there. And instead of, reading a PDF or manually putting in, it automatically feeds into your, and as long as your taxonomy is same, it kind of helps.
So something I think 12 years back, I was working with a company regarding that XBRL, how you can get the data analytics very, very quickly from there. So next, if I say, so accounting function, accounting, treasury.
So accounting, together. Mostly treasury is together. So, you always have to take care saying that, look, I mean, liquid funds are usually giving you in the range of 6-7%. So any money which is left over in the bank for a day or two obviously has that cost. So optimize that accounting function in terms of identifying when your payments are due, when are you going to receive money, and time it the investment in a efficient manner so that, your overall objective returns are optimized. That function essentially they do. Beyond that, obviously, is the regular cost matrices and MIS, which they do, which are kind of mostly working capital oriented, but not much beyond that. I mean, for us, we only have one income, which is the management fee, and we, majority of the expenses are maybe distributor or salary or rental or otherwise. So we don't have that great a list of expenditure or otherwise, and number of vendors are also less.
With that, it's a service space.
But there also, for example, right now, in order to kind of, let's say, there is a requirement to check whether the clients have given their code of conduct. I mean, the distributors have given their code of conduct, or they have passed their examination. Those kind of checks and balances needs to be incorporated over there. Now, they understand TDS and GST very well. But for them to understand why you need a certificate in order to get a payment is a little bit difficult. So you'll have to kind of make them understand. The biggest kind of, apart from, the accounting and, maybe the IT, the other biggest department is products. Now, product is where you would obviously, keep an eye on what others are doing, what your peer group is doing in terms of ideas, in terms of funds, in terms of strategies. They also keep an eye in terms of what pricing is competitive, kind of, how differentiated the strategy. I mean, almost everyone or every other manager you will meet is a long-term player, he's a buy and hold, he's, he buys quality companies, and I haven't seen anyone who says otherwise, right? So with that, how do you differentiate a product, right? How do you make sure saying that, what words do you use in your pitch? How do you kind of design that philosophy of that product, and how do you then communicate it to the client? What investment management manager thinks is a different story, and what you communicate to the client could be different. So you want to sync in those things, right? Now, that understanding you can only have if you know investment in and out. And I always tell this, that a product manager knows more about the company than the fund manager himself, because he has to kind of explain that about the company to 10 different distributors in terms of why this product is suitable for them, right? And they do, they end up doing attributions, they end up doing, dollar returns, they end up calculating your max drawdowns and Sharpe ratios. I mean, Sharpe is a very simple thing, but information ratios and, they go beyond that, right? So my product guy will essentially know, saying that, look, our information ratio is low because of these 5 stocks, or maybe this particular sector, this particular year we did not do well, or vice versa, or our majority of the returns are coming from selection effect and not from allocation effect. Now, that knowledge is not expected from a regular finance. You can't survive in product unless you are a charter holder, or you have some finance background from that perspective. And without deep understanding of how investment process works, you'll not be able to tell the same thing to the people who are going to approve it, right? I mean, when distributors do it, or when these advisors do it, they also have their fiduciary duty. So they're going to ask you relevant question, right? I mean, it's not that they will simply look at the performance and then, I have partners who are doing pharma French analysis on our models and saying that, look, whether you are momentum player or value player or otherwise, and then they go through that, and it's our job to kind of give them data and otherwise give them explanation, right? And one of these recent partners, we were arguing between why a pharma French model might not give you the right result of the strategy or analysis of this thing than a attribution analysis, right? And I had to explain to him, saying that, look, pharma French it's basically on historic data. So if your stocks were high growth and they obviously did very well, it will show very high momentum. Right? Or if your stocks are not performed at all, or the PE is still the same, it will show very, very high value bias, right? And you will not be able to check whether the manager is skillful or not. So in order to see whether the manager is skillful or not, you look at the selection effect. If the, out of the attribution, the, allocation and selection, if the allocation is negative and selection is very highly positive, that will show you the impact of it. Now, that understanding I will not have unless I would have gone through the investment process myself. Right? And give them that example in terms of why this is the case with this, right? It could be as simple as liquidity analysis. Now, you would understand the thing that most stocks are liquid anyway, right? Because they're listed. But you kind of assume, saying that a 20% participation rate, how many days I'll be able to liquidate. You calculate. So we had to set up our own model in, obviously Bloomberg has his own models, but we had to kind of customize and find out our own model, saying that, okay, let's put it this week so that we can better message this to our audience or investors. So those kind of analytics, those kind of understanding of the product, ideating the product, kind of making it a finish line. Because see, look, your compliance department can do, filings. They would not know what the product is. Right? What constraints, what restrictions.
Like pre-sales. I mean, this is what You have to first analyze what is going to sell, then
What's
you get
going
it created, and to create that, then the fund managers are the
Exactly.
investment team comes in.
Exactly my
And
point.
then that investment team is where the sales people are going to be selling it.
So most manufacturers,
Mhm.
manufacturer AMC,
Mm.
the biggest and most important role is product,
Right.
right? Because it involves talking to a lot of people.
Yes.
It will involve talking to partners, vendors, it could be as boring and simple as making a presentation, by the way,
Mhm.
for your product pitch.
Right.
And it could be as, impactful as, having a call with the fund selector to tell them why your fund is better than a mutual fund, or why in a bad time you perform still well, or why your, process and philosophy is better than everything else, right? So there are a lot of softer aspects which goes into the entire manager selection, which you've read in your level 3. That comes into your,
level 3 and
product role.
CIPM also.
CIPM also.
Right.
And by the way, I did my CIPM way back. I thought maybe there was a market for GIFs.
Mm-hmm.
Okay, and we would end up
working a little bit on
doing
GIFs
something
together.
on GIFs, right?
Yes.
Now that knowledge comes handy today.
Yes.
When we are presenting the performance,
Yes.
right?
Yes.
Because we at some places, where regulation required, we are okay to present a net of tax and net of expense performance, right? Largely because you understand saying that this is what the intent is. You can't be very different in terms of performance, right? So what comes to your rescue when you don't know, right?
Correct.
Same story.
So we have a product team, we have sales, we have accounts, treasury, let's say combined. We've got the investment team would be the regular associate analyst,
regular standard.
Sector heads, and then the fund managers.
They're usually, so
And
each
the CIO.
analyst would have one primary sector, one secondary sector.
Okay.
On an average, primary sector would have between 40-50 names which they will cover.
Okay.
And secondary is something which they're covering on top of it.
Okay.
Right? So for example, let's say if you are a metal analyst, you will do other commodities also. If you are a pharma analyst, for example, retail or QSR is not a standalone sector.
Yes.
For a sell side, it may be. For a buy side, it has to be combined with something else, maybe consumer discretionary or something else from that perspective. A lot of these luxury goods sector that again gets combined into these, right?
So a 40 stocks primary sector, secondary how many on an average?
About 20 or so. Because the secondary stocks will be lower.
And how many associates would they be having, an analyst?
So we don't have a model where an associate works with, typically if you look at AIFs or PMS, which are kind of more leaner teams, you see the associate working with analyst and those kind of model works well in sell side.
Okay.
In buy side, even if you're an associate, you're also an analyst.
You're an analyst.
You may not be covering a primary sector, but you're still covering some sector.
Right.
You are required to maintain some research notes. So again, I tell this again and again, don't go by the title and don't go by the salary. These two have a habit of changing very fast. And it doesn't matter what the title and what salary is. Ultimately, it matters what work you're doing. And if you're adding value to that work, just go for it from that perspective.
So a team of how many people would be covering, let's say, these 60 stocks?
So each analyst, so we cover almost about 375 to 400 odd companies within our coverage. We have a total investment team of about 18 people.
Okay.
Out of which there'll be like 3 portfolio managers, 2 dealers. So that's roughly about 13 people for that 375, 400.
Headed by the CIO.
Headed by the CIO.
So the other verticals would be service.
Now, out of 100 people which we have, let's assume 20 people are in research, but the 80 people are in the rest of the other functions.
Yes, that's what the whole idea of this.
So the product team itself is about 10 people. Domestic and offshore products would be there. Sales would be about 10, 12 people, right? Service would be about 15 people. Operations, fund accounting would be together. Service again, we keep customer service separate. These are people who receive calls and who obviously
of the existing onboarded investors.
Understood from that perspective. We have a very large compliance team. The compliance team itself is about 7 people at our side.
Okay. The way SEBI is going about it and the increasing
any regulator for that matter. Any regulator for that matter. And like I said, the value is here again in terms of reading multiple laws and multiple kind of understanding. And a classic example I'll give you. A lot of people, obviously a lot of AMCs would accept, your non-resident Indians to that extent, right? Non-resident Indians could be living in a country in which you are not registered, right? Technically, you are not registered, right? Now, you can always argue saying that, look, SEBI doesn't have any restrictions on, accepting these people as clients because they are necessarily Indian. But you might be breaching law of that particular country because you're not allowed to solicit there and vice versa. So you have to put in a framework saying that, look, I will only onboard a client if they are in India or if they reach out to me rather than me reaching out, right? Now, it's interesting in certain countries like for example, US, if my citizen is anywhere in the world or anyone else staying in my country, you cannot solicit.
Okay.
Now, how do you differentiate? I mean, there might be an NRI who's staying in US, or there might be US citizen passport holder staying in India, and that becomes a conflict in terms of. So we had to say a no to a lot of these kind of businesses where we thought there is a regulatory challenge.
Right.
It's easy to accept. It's difficult to say no, right?
True.
But over time, partners have understood, clients have understood, saying that look, it's going to create challenges for them. Now, hypothetically, even if I accept them, saying that okay, who's going to come to know? Let's just go ahead and accept it. But at the end of the year, I will file their FATCA returns or their, CRS return. And somewhere that information getting fed into regulators somewhere.
Yes.
So somewhere, this can create a problem for the client itself. And if you're acting in the client's interest, you will tell them saying that, look, we are not registered and you might not be able to claim taxes or don't do it in a product which you don't understand, right? It's a very difficult task, but at least, we are aligned saying that, look, our risk appetite in terms of, regulation is very, very minimal. So we don't want to take any chances or anything where we are not clear out there, right? So compliance is an important function where a lot of these day in, day out things are required to kind of, understand. And there, obviously, understanding with respect to investment is most important.
Yes.
I mean, you can obviously read law, but in order to understand why the law was made at the first place, what was the intent of the law, that is required.
I actually come across a lot of people recently who have specialized in terms of law and finance. Also in terms of structuring PE deals and contracts and legal contracts and all, putting together these things. In fact, taxation and finance also, when we are looking at, I just met this person a while back. So in terms of structuring, so for example, PhonePe also, when they relocated to India, in terms of shifting the investment, they had to pay a huge amount of tax.
Think of it in this way. If you want to get into a private equity firm, now you will know that private equity firms are anyway lean.
Yes.
Right?
Yes.
Now, you will have one person who's leading the deal. He should know taxes also.
Yes.
He should know legal also. He should know structuring also. He, by definition, should know investments also. And he should also envisage where things can go wrong and the mitigants of risk perspective.
In terms of society also, what is going to work, what is not going to work.
You need one person who knows everything.
Right.
Now, whether you are a company secretary or a lawyer or a chartered accountant, if you think I have done enough and this is it,
it does not work.
You're mistaken.
And there are times when people want a very customized job. It's not a pizza topping that you're trying to get. I mean, you have to be very comfortable with maybe liking 60, 65, 70% to the max. 30% is something that you may not like, but you'll have to still go ahead.
You will never get what you like. I mean, it's not 100% to, it's like portfolio, right? I mean, I did this recent research saying that, we all say that India is at all-time high. The markets are all-time high, whether they're overly valued. So, out of last 10 years, 9 years, India markets have made all-time high.
Okay.
Out of last 40 years, almost 70% of the time, 27 times, India market has made all-time high. Right? Now, if you had thought 27 years ago or 40 years ago, India market has made all-time high and you should not invest, you will be out of the race. Right? So, growing markets have a habit of making all-time highs, right? And so is our careers. Our careers are growing. And in order to make all-time highs, we have to continuously invest in it, right? Learn. And if you don't do it, you don't get it. The idea of meeting people, and we talked about this networking point before, the idea of meeting people is to learn something new, learn something different about it, right? I mean, at least you know where to go to in case you need to find out something, right? It's more specific questions, because at the end of the day, I mean, any investment professional is as good as how better he knows himself, right? It's all about the behavioral aspect of yourself. And a lot of times you need someone else to kind of give you that clarity and that messaging which you can act upon. And that is what I think, you'll have to design the people around you and the support system around you, whether it is through books or whether it's through people or ecosystem, but that's what is going to help you, right? And unless you add knowledge into it, you can't add knowledge to the work itself, right? If you've seen hospitals, most times now we don't go to specialty hospital. We go to multi-specialty hospital.
Yes.
Your careers are like multi-specialty now.
Yes.
You can't be just an MBBS or an MD in something. You go to multi-specialty.
Right.
Okay, I can do this also, I can do this also, I can do this also, I can do this also. Right? When people will find that you have 6 different trades of 6 different kind of jobs which you can do in one, that's your selling point. Right? So if you are, done with finance and you are like, okay, I'm done and I don't want to study anymore, you are in the wrong place.
Actually, reading more of non-finance stuff over the last few years, also because of the lot of recommendations that you have given. So I've been reading a lot of different subject areas. In fact, actually, I remember you pushed me into reading different areas beyond finance because I was totally into finance. And of course, that time my career was also, I was first trying to specialize in finance and then the other areas needed to level up. Any other support function that is there that you use?
I think people are the biggest support functions which I think
Yes.
are there. And, people or people's, work, whether it is like books are essentially people's work. The most amount of value I've found is, reading autobiographies because it's like looking at someone's life through their own lens, not biography, autobiography, because that person himself has written it, right? I remember the first one I read maybe 25, 30 years back was this autobiography from T.M. Session. He used to be that time election commissioner of India. I don't recall the name, but that was like a very different this thing. And he was explaining how he has to kind of deal with multiple parties in a large country like India at the same time uphold fairness of election. Even though it happens every once in 5 years, but for them, some or the other state or some other place elections are going on. So for them, it's like a regular thing, right? And you will not believe it. We hold the largest election in the world, like 10.5 lakh booths. Even US cannot count all the votes in one day, and we can count our own votes in one day, despite whatever turnout which we have across the country.
Even with the CoWIN app and UPI and everything we've done, it's tremendous. The way things are being done in certain aspects, at least. So somebody who's starting on their investment journey, how should they go about it? At the very beginning, early 20s.
Look, you have to invest in India.
Okay.
The sooner you invest, the sooner you will realize the power of compounding. Okay. So start investing as early as possible. It could be as low as 100 rupees or 1,000 rupees, but start investing as early as possible.